This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hey guys, welcome back to Breaking Banks Europe. I am Matteo Rizzi, the executive producer of the show, and I am super proud today to introduce a new format. You know, we like a format a lot that allows us to tell a story that develops during the course of the year. And the name we have invented for this format is Breaking Chains. Even the title might evolve. We might find something more closer to the topic that this is going to be about. But for now, we stick with Breaking Chains. And I am today inaugurating this format with a very special guest, Stani Kulechov, who's not the first time here with us in Breaking Banks. Stani is the founder and CEO of Aave. Stani, welcome back to Breaking Banks.
Thanks, Matteo, for having me here again. It's definitely been quite a journey, and there's some time in between. So happy to be here again.
And of course, guys, I haven't dive into the format yet, but as you can understand, is 360 degrees around blockchain, crypto, and DeFi. Certainly, three topics we cannot ignore. And of course, I am more an aficionado than a specialist. But the good news is that I don't need to be, because Stani is. So, Stani, we assume that in 9 months since your last appearances, people might have, forgot. So why don't you introduce yourself and Aave, if you have to explain it to a non-technical person to start with?
Yeah, I can try to explain, but pretty much what Aave does. So we, as an Aave team, we build a protocol where you can take cryptographic assets. They can be any kind of cryptographic assets that you can actually deposit into this protocol and then earn interest rates. So in essence, as an end user, you will see the assets grow in balance, which means that over the time you earn for holding your cryptocurrencies or any kind of digital asset that is available on Ethereum and is accepted by the protocol. And we basically how the system works is as you deposit into the protocol, that deposit becomes also your so-called collateral. And then you can borrow another assets out of the system. And this creates this interest rate market. And this all is built on one of the most popular blockchains out there, Ethereum. And Ethereum is very robust on building this kind of protocols because you can create complex systems that actually are interoperable with other complex systems that has been built on the same network. We launched the Aave protocol itself last year, January, and currently the smart contracts itself. So smart contracts are pretty much like the basic code infrastructure that we have deployed. The protocol, we hold over 11 billion worth of value in those smart contracts, and in total market size, it's 17 billion. That includes the borrowing volume. So not just depositing, but borrowing. And the volumes are growing quite substantial. This protocol is part of so-called movement called decentralized finance, where you interact with blockchain-based financial systems. And it's been growing quite substantially now over the past couple of years.
Actually, is super interesting that this overview, breaking banks and myself as well, and as sort of has got the first interaction with DeFi a little bit, over a year ago. And the bull race that was with crypto sort of reflected, if not even in a higher fashion, into the volume. I read a bit of the numbers, of course, because I had to kind of prepare myself before getting into this show. The market grew exponentially. And let me try also to tell you what my own experience is. That might be closer to the vast majority of the people that are listening to the show. Of course, I open up an account in Coinbase, like most people. I started with the classic Ethereum and Bitcoin, mainly not as a huge investor, but simply because I was curious to see how the market was floating. And because we are all in fintech, it's always good to sort of keep an eye on how these cryptos are going. And then all of a sudden, and that was like a pretty much like a bet 360 sort of, according to when you got, or how smart you were in understanding that if you just leave it there and forget the money, it will eventually grow. Then all of a sudden, someone introduced, I think it was Ajit, one of the other hosts, and full disclosure, actually working with Ave as well currently. I started figuring out that there was a way to really break down barriers, in terms of how financial services and financial services products are distributed. So I started to get closer a little bit. And then in my, through the same Coinbase portfolio, I started investing in what we call stable coins or altcoins, right? And now I realize that literally everything is being decentralized. So it's not your decentralized borrowing, right? But there are people with decentralized storage, people with decentralized emails, and we will soon have, our Italian friend Roberto Capodieci. He created his own blockchain with the sole purpose to decentralize everything. It's a very ambitious project. So why, Stani, only in the past, I want to say 2 to 3 years? I mean, DeFi wasn't the word, for the masses 2 years ago. It was not, right? It was an intention, but not, people didn't even write it as a DeFi, So what happened in the past 24 months?
I would say very, very, very interesting topic, because when we started first building decentralized applications, or actually decentralized financial applications, that was 2016, early 2017, we deployed our very first smart contracts under like previous lending protocol, ETHLend. So that was the start of like this over collateralization, collateralized lending on Ethereum. But what we noticed back then, besides what we had, there was just one so-called decentralized exchange where you could swap one cryptographic asset to another, EtherDelta, the very, very famous one. But besides that, there wasn't kind of like an ecosystem of applications. And during 2016-17, pretty much all of the projects on Ethereum, for example, tried to achieve this kind of like a horizontal approach where you build a protocol and then that helps the next kind of like a protocol that will be built on top. And there wasn't that much of actually, would say like a vertical approach all the way solving the end user challenges, solving the wallet challenges. How do you secure your wallet? How do you interact with these decentralized applications? How you improve the user experience? This kind of things was something that was a bit alien back those days, because everyone was focusing on the infrastructure. And what was important for us at Aave is that we built pretty much horizontally. So Aave itself is Aave protocol is very developer first protocol. So we have over 100 of integrations where the liquidity actually comes from and is consumed. And what's interesting here, despite of this liquidity that is coming elsewhere, we focused quite a lot on actually having this vertical approach all the way to the end user experience. And now from traditional banking experience, how you could have some perspective to what kind of issue we had previously is that in traditional finance, the most innovative field at the moment was and still is fintech, financial technology, in the sense where fintech is focusing on actually improving the user experiences, improving the kind of like a front end of the finance and making it better, because banking systems per se, they have legacy systems all the way from decades ago. And it's infrastructure built on top of all the infrastructure and this kind of like a mesh of complex systems. And now what decentralized finance actually does and importantly solves is that it upgrades the back end of the banking system, making it more efficient, making it more transparent, more open, and open in the sense not just accessibility, that everyone can access and consume peer-to-contract manner where you interact with smart contracts directly, but also anyone can build the next Aave, for example, or any kind of a product or service that is kind of supporting the ecosystem. And after 2017, what we saw more protocols that were trading protocols, liquidity providing protocols, Kyber, Uniswap balancer, and we saw stable coins coming in. So when we started, there wasn't any stable value on Ethereum. So everything you did in lending, borrowing was nominated in Ethereum, which made things very complex. And what happened at some point when stable coins started to be like the more kind of like adopted currency in not just one stablecoin. There was DAI, USDC, and USDT at the same time. This brings an ecosystem where actually you could do a lot of financial transactions and that mimic something that we already have in traditional finance, but in more efficient, interoperable way that we have. And this built the whole kind of like an ecosystem. So we started to see multiple new products coming in. We saw kind of like a new protocols and also protocol improvements what we already have, because in open source community you can look at the code, look at what others are building, taking that code, forking it, and just improving it. And this is a constant cycle of innovation. And as the ecosystem started to grow enough, there's practically this competition of opportunities and innovation. So essentially what decentralized finance is, it's an ocean of liquidity and algorithms where they match together. So practically anyone, any part of the world could create a new algorithm that practically attracts new liquidity. So it's constant competition of innovation and making finance more efficient. And now when anyone can build any part of the world and participate into the system, build these products, the innovation cycle is just very, very quick. And this is why people usually say that things are progressing so much in decentralized finance. It's because of the open nature, because of the fact that everyone can participate and use it. And end of the day, everyone is kind of like helping towards the same goal. And then you have incentives on top of the ecosystem, and those kind of like drive things more faster.
So you mentioned the sort of the role of the financial institutions, and I want to hold that thought because this is going to be the next topic I want to talk with you about. But before, I try to put myself into the shoes of someone who has, who sees this sort of crypto world as, a bubble, not like an economic bubble, but a bubble as something that he or she can't sort of get in, right? Or can't make his or her head around it. And the way I try to explain it to my grandma, as I, most of the time blog about things, I was saying that on the sort of lender side, I will say, okay, I am a Portuguese resident, and I want to lend money to someone in Nigeria or to someone in Italy, to make things easier. So I could actually invest or put money in some of these fintechs who, lends money to SMEs or to individuals, but I can't I can't. Why? Because I'm a Portuguese resident. I don't have an Italian bank account. So even that simple obstacle makes this super simple statement as, I'm a European citizen who wants to sort of put his money, to an yield by lending it to someone who is not living in the same state. Okay. Now this is getting more and more possible because, passporting and, lender market and all these guys. But all of a sudden, if instead of taking Portugal and Italy, you take Portugal and Nigeria, then it gets virtually impossible. So I want to say that on the lending side, the providing capital side, this is what the DeFi allows anyone to do. What I want you to try to explain as as a simple way, if it's possible, is how does the last mile looks? So how do I get, as an end user who wants to buy a car? I actually saw this, because this is where when someone can buy a car or a TV or getting a loan, through DeFi, to do things that today you either go to a bank, or if you're more sophisticated, you go to a fintech for it. This is where is really going to be democratized. So what is the last mile looks today?
Last mile definitely relates to democratizing of finance, and not just democratizing, but also kind of like bringing to transparency. But we already see this happening in the DeFi space, because if you look at, for example, what the Aave protocol is doing, it brings everyone equal opportunity to participate in interest rate market globally, anywhere these individuals or entities are located in. So, for example, I here from London have the exactly same yield for anyone else participating, for example, from Brazil or from Thailand or Singapore or China or whatever the kind of like a consumption is and supply is coming from. And this is substantially interesting because in our case, that's of course the yield side, the deposit side. But then the interesting part is like how we then ensure that we have a borrowing credit market that is practically borderless, global, and works in a way that empowers people around the world. So how we can actually use this like big liquidity ocean that we have in decentralized finance, how we can take that liquidity and just empower across globally in Africa, in Asia, and South America, for example, and also in Europe. And when we look at these different kinds of markets, one of the things we notice is that we see liquidity coming in now. So DeFi is all about, at the moment, like how we can get more liquidity from traditional finance, more institutionals. But at some point, the switch happens in two folds, in the sense that we're thinking like how we get the liquidity out. And for example, in Aave protocol, we have this functionality called credit delegation, where if I deposit into the protocol USDC, which is one of the most popular stable coins out there on Ethereum network, I could actually, as I'm earning yield, I could actually delegate my borrowing power to someone else that I trust, just by trust basis. But I also could delegate it to an entity that handles, let's say, underwriting, credit scoring, any part of the world. And these entities could be multiple, kind of like a network cycle, in the sense that, let's say, you have a underwriter, let's say in Africa, that has certain type of underwriting loans. You might have some underwriter in UK, in US, and this actually allows great entities that are managing credit risk, underwriting, and taking the liquidity out of the decentralized finance and plugging it into the economies where it needs most empowerment. And interestingly, like if you think about like how we achieve this, I don't think the answer is technical. Like technicality is already, like the technical solution already exists. You can do this today, and you can convert then funds, let's say stable coins into fiat assets and so forth. But there's like two important things what needs to be solved, and one of the things is incentives, and the other things is growth. So practically, if you incentivize this kind of behavior, that you actually take credit from decentralized finance and there's successful repayments and you get rewards from that, that will be one of the substantial things that will empower the whole system and kind of like takes the liquidity out of decentralized finance to traditional finance. And this can be seen in decentralized finance now. For example, when you provide liquidity into the Aave protocol. So when you are depositing funds, stablecoins, Ethereum, any kind of asset at the moment that is accepted, well, not all of them, but the main assets, practically, the main widest assets, you're getting actually governance power. So you're getting Aave tokens distributed directly to the users, the borrowers, the depositors, and the protocol itself is governed by the token holders, which means practically the community itself. So those are incentives for people to actually do the borrowing and lending activity. And the second thing, most importantly, is that we need to find opportunities where actually this kind of a behavior will create competitive advantages for businesses that are drawing liquidity from decentralized finance. So if we can create, by taking liquidity out of DeFi into the traditional finance, if it creates a competitive advantage in terms of like getting liquidity compared to raising capital against private placements or taking credit in markets where you have high interest yield, for example, Brazil. In Brazil, you might have from 20 to 30% rate on your borrowings, and this is inflation adjusted. So if you get liquidity in a competitive fashion into those markets and make the next kind of like a bigger scale up companies and empower those companies and individuals, that creates a network effect where we get more liquidity out of DeFi into traditional finance. And then we have twofold cycle where liquidity comes into DeFi and also leaves the system to empower more wider public.
Do you see also, Stani, a world where people won't simply like borrow from DeFi to buy their TV or their car, but also like a company to borrow capital to grow, and almost like the venture is a DeFi venture capital market, we'll see the light of the day. And like a follow-up question, how do you see the role of financial institutions? Because if I understand correctly, what you just said is that I could actually put liquidity available in a DeFi platform, and then I could delegate my bank to actually make loans with that capital. Is this one of the roles that you foresee for financial institutions, like more as on the deploying capital side? Or is as well as into providing the liquidity, or maybe is there a role for financial institution that I'm not seeing yet?
I would say so how we see now the whole venture capital market, we see it in a kind of like a very processed cycle where you have different like funding rounds of let's say equity capital, and when it comes to the Web3 environment, you kind of like have this equity capital raise, and on the side you have also the kind of like token economics in play as you have the product out and the ability to issue a network token and then decentralize that network and give it to the community. And I think what's happening in the future is practically we'll see a scenario where some of these protocols are becoming quite large, and by large I mean something we have never seen before. Because in whereas a bank empowers people, businesses in certain jurisdiction, certain area, a DeFi protocol might empower half of the population one way or another. And this is substantially different. And we can take a look at protocols we have today and we use on a daily basis: HTTP protocol, IP protocol, various different protocols that are created when the internet of today is created. And what we're creating now is basically decentralized internet, where actually those functions are owned by the communities. So over the period of time, the Aave protocol itself is becoming community owned, and the more users are depositing funds, borrowing, the governance power is distributed more widely. That's important for like democratizing this financial protocols, which are comparable to public goods in the sense that no one should actually own them in a centralized fashion. Now, when we look at these protocols like Aave and what we have in the DeFi ecosystem, they're starting to become self-sustainable. In the current form, the Aave protocol is earning 1.5 million in revenue for the depositors, and in a monthly basis now earning practically millions in terms of like the decentralized treasury, just funds, which means that the protocol doesn't need anymore the Aave team to be sustainable, but the community can actually start allocating those funds and building new things, upholding the protocol, improving it. And at some point, what will happen is that these protocols will start also funding things that are being built. So I could imagine the same way as in back in when internet was born, Web 2 was born, that whatever business model you have, if you get funded, let's say the HTTP protocol funds you, the IP protocol funds you, anything you publish in the internet, it funds you without the intention of taking any equity or anything, but just getting more infrastructure into the public system. And this is what we'll see, kind of like that these big protocols will become capital allocators without any kind of a retainer of equity or any portion of whatever is being built necessarily. That might happen, but what's interesting there is that it's empowerment of building more infrastructure in the sense of public goods, and this will substantially change the fundraising models when it comes to venture capital, debt fundraising, and I think we're not far away this kind of like a system to be actually in place in DeFi.
Back to how are financial institutions playing a role into this, because I suppose that reminds me a little bit the 2008 and 9 when the first fintechs came in after Lehman Brothers. Anyone was saying, these guys are trying to eat our lunch, and and they ended up sort of collaborating fully because they understood that on one, the agility and the innovation of startups could be matched with, in some cases, the availability, the liquidity, the availability of capital, and the capillarity and the distribution of the bank. So that's how some of the marriages, in fintech were done. Do you think will happen the same thing in DeFi?
I would say it will go even further. I would say that the DeFi space itself is impossible to stop because of the amount of innovation going all the time. When there is thousands of developers across globally trying to achieve the same goal, deploying code, like basically forking each other's code, improving it, there's this constant innovation and battle of algorithms and battle of liquidity happening. So the innovation is there and the talent is there because of the innovation. And because the system and decentralized finance is over incentivized, every system, every kind of like a community has some sort of incentive mechanism there to empower their community. It's kind of like designed to roll by itself. But from traditional financial perspective, and what I would say is that decentralized finance is more of an opportunity to actually being able to partake into these protocols and kind of like be part of the decision making on how these protocols will be evolved in the future. And I always love to take an example, open source example of, let's say, Linus Torvalds. So Linus Torvalds, he's basically from Finland. I'm from Finland as well, and we have very big open source culture there. And currently, for example, what started as a small community project became mission critical operation system that Linux is today, which almost each and every server on the planet has in its tech stack. Now today, for example, there's over 2,500 contributors for each and every Linux release. And most of the contributors are not actually any more volunteers, but people who are working in, let's say, big tech, might be in financial companies, very different kinds of positions that are paid to contribute into this mission critical software. And now what will happen with decentralized finance, we'll see the similar kind of contributions from big tech We'll see code contributions. We'll see also code contributions from traditional finance actually to participate and improve the protocol, but also as they're providing liquidity, whether their own balance sheet funds or their end user customers funds, there's governance power that is distributed, for example, Aave tokens for these entities, and that gives them power to actually and have a saying how these protocols are developed in the future, how the risk parameters are adjusted, and everything happens in transparent fashion. When we look at what happened in 2008, 2009, no one know where are the exposure, like how much Lehman was exposed to other banks, Goldman, JPM, like all of these things are based on reporting and which is quarterly, annually, and whatnot. But what blockchain offers and what decentralized finance offers is that you have oversight, constant oversight on each and every second. What is the exposure? So that these protocols are completely auditable by anyone, which means the regulator, like the public itself, and also the governance is transparent. I think this is the way to build not just financial systems, but any kind of system that has like takes power and like from the users. So it's like decentralization is just not, it's not a movement, but it's actually building better systems in overall and better public goods.
Stani, I hope that this 30 minutes gave the sort of glimpse, to our auditors of how potentially disruptive is DeFi, not just for the taste of being disruptive, but for the purpose of building a fairer, more accessible, and more ubiquitous, set of financial services for everyone. And believe you me, for someone who is so passionate for financial inclusion and investing in emerging markets, that gives a huge hope, on how these technologies will transform or can transform, especially, the areas of these emerging markets where, the regulator could help in making DeFi mainstream and sort of having a quantum leap in terms of adoption of financial services in a way that only a couple of years ago was not possible. Stani, thank you so much for being with us. If you don't mind, I'm going to put you on the spot a little bit. We are going to do a FinTech Stage Festival in September. And we're going to have at least half a day dedicated to the point on DeFi, and it's going to be roughly in 6 months from now. So I really like the fact that every 6 months we have a conversation on the state of the art. So if your agenda make it possible, I would really love to invite you officially, from the show to our FinTech Stage in September with our Italian friends.
I would love that, Matteo. I will make some room and definitely happy to join. And I'm ready for that.
Stani, thank you so much for being with us. Keep up the amazing work that you guys are doing. And until next time on the show, thank you so much.
Thank you, Matteo. Thanks for having me.
Hey guys, stay tuned for the second part of the show. We were talking about the role of a financial institution in this new brave world, and Societe Generale's company Forge and its CEO are having a conversation with our host Ajit on an amazing project you want to hear everything about. Stay with us.
Do you want to be part of Breaking Banks Europe? Reach out and learn more about the opportunity to be featured in one of our shows. With over 1.6 million listeners and counting, Breaking Banks Europe is bound to become the place to advance critical dialogue in Europe and the UK fintech scene. Reach out on Instagram or Twitter at Breaking Banks EU, or go to www.provoke.fm.
Hello and welcome to Breaking Banks Europe. This is the Breaking Chains series. We are on episode number 79. And today with me, I have a very special guest. He is Jean-Marc Stenger. He is the head of Société Générale, for a bit, it's hard to pronounce French names, Société Générale Forge, which is the digital innovation unit, the crypto and digital assets innovation unit of the bank. Jean-Marc and team have been doing some pretty interesting things for a few years, and I've been keeping track of some of the work they've done in the MPC. We'll explain what that is, and central bank digital currency space. But there is also a bunch of things that we don't know. So, as media people, we are always looking for scoops. So, Jean-Marc, hopefully, you will give us some scoops, and welcome to the show.
Welcome. Thank you for having me.
Amazing. So yeah, thank you so much. So please tell us more about your journey and about Forge. So what is Forge, and how did you get into this?
Yes, sure. So SG Forge is a new subsidiary of the capital market arm of Société Générale Group, so one of the leading financial institutions in Europe. And basically, we are responsible for building the capacity of the bank into the digital asset space. And for that, we have created this new subsidiary almost a year ago and built a platform to deploy those capacities across the spectrum for the clients of the SocGen group.
Okay, great. So you've done a number of interesting things over the years. So can you tell us which of the areas you find most exciting from the work you as a team have done?
Yeah, sure. So obviously, blockchain technology is potentially changing a lot of things within the financial industry landscape. And at Société Générale, we are definitely willing to be at the forefront of those innovations and driving in the driving seat, I would say. So basically, we are building and we are offering to clients basically services in 3 areas within the digital asset space. An ability, a capacity to issue financial products in the form of native security token deployed mainly on public blockchains. Currently, we do support the Ethereum and Tezos blockchain. That's number one. Number two, we are offering secondary market capacity on those security tokens to allow investors basically to buy and sell on the market those security in a digital native format. And number three, we are offering crypto custody capacity to basically safekeep those assets under this new technological format.
Awesome. That's wow. That's coming from a bank. That's actually very, very exciting. So explain to me what security tokens are, and how are they different from, let's say, Bitcoin and Ethereum?
Yeah, sure. Well, basically, first, I have to mention that SocGen is not willing and is not currently supporting cryptocurrencies such as Bitcoin in its operation. The idea for us is really to leverage this technology to build the capacity and to allow our clients, financial institutions, corporates, asset managers, basically to get to the next stage in terms of services and user experience, I would say. Leveraging technology to offer digital native security, meaning securities which are deployed on the blockchain and which do exist on the blockchain as financial instrument, like any other financial instrument, bonds, structured product, equities, anything, except that the security token format is the only one which do exist. We do not copy-paste existing security on the blockchain to improve, for instance, post-trade operations. The tokens we built natively on the blockchain are the financial instrument and are completely pari passu with traditional bonds, for instance, the way they could exist in traditional market infrastructure. And that's why we spend a lot of time and effort also to work not only on the technological aspects, making sure obviously we have state-of-the-art technology, but also on the legal and compliance part of it to make sure investors and issuers will find under this new format exactly the same rights they could have for traditional securities.
Okay, so I have a question on that. So as you have seen, lots of banks are now starting to support cryptocurrency custody, and I think you mentioned that that's one of the things you're doing.
Mm-hmm.
So what's your and now crypto has become a as of yesterday 2.5 trillion, as of today 2 trillion cap asset class. So are you going to be offering cryptocurrency custody to you as well?
Well, we follow that very closely, obviously, and we often received requests from clients to offer these services, and there is probably a need for that in the market. But as I said, currently it's not the intention of the SocGen Group to offer crypto custody services as far as traditional cryptocurrencies are concerned. We really stay into our playground, which is financial markets, and with the goal to leverage this technological framework to enhance the service to clients in the traditional market space when it comes to, get financing or issue any debt, for instance, on the market using this new format.
Okay. So, I've heard about. I work in crypto full time, and I've written about security tokens. Back 3 years ago, security tokens seemed to be extremely promising and were supposed to be $1 trillion market, but the growth has been relatively slow. And one thing we have noticed is that a lot of companies came out and started issuing security tokens, but secondary market liquidity has been relatively low, primarily because CSDs haven't shown a lot of interest in supporting this new technology. And to some extent, there is also the issue that security tokens might by virtue of being on a public blockchain at some point in a registry, might actually disintermediate central securities depositories like DTCC and so on. But getting a bit technical, so we'll get in fact. So why are security tokens? There are so many people issuing security tokens, but not really enabling secondary market trading of security tokens. First question, and secondly, how have you done it?
Yes, sure. Well, many questions actually into one. So we still believe at SocGen that it's indeed a $1 trillion market, and that a big chunk of what we see in traditional financial market will actually shift sooner than many people may think into this format. But it's fair to say that the pickup has been fairly low. I think the main reason for that is actually it's much more complicated to operate those securities under a regulated format on the blockchain that it is, for instance, the case in non-regulated digital assets such as cryptocurrency. Obviously, you have to comply with a lot of regulations and rules and compliance requirements to be able to offer this service under a digital native format. So building this infrastructure and agreeing on the right operating mode is not that easy. Setting up the proper legal documentation is not that easy, and it's quite expensive also at the end of the day. So there are good reasons for that pickup to be slow, but actually we see that increasing much more rapidly than what many people actually could have anticipated even 3 years ago. Talking to our clients, for instance, we see that adoption is growing. There's probably still a need to set a proper standard of operation and data model for this market to be adopted at scale, and that's also what we are pushing at Société Générale Forge. We have proposed an open source standard called CAST, Compliant Architecture for Security Token, which is offered to our investors and actually any market participant who want to onboard on this market without having to do heavy upfront investments. But adoption is growing, and we see that happening. The second part of your question was how do we do that at SG Forge? I guess maybe the easiest way to answer the question is basically to say and to explain that we are building this capacity together with our clients. We, over the last 2 years, we choose to work on a limited number of transactions, real market transactions, where we issue native security token. With clients, with issuer, willing also to build this market with us and be at the forefront. We have issued bond, covered bond, unsecured bond. Issuances in the range of 50 to 100 million euro each. We have also issued structured product. As you may know, Société Générale is one of the leading provider among financial institutions of structured product solutions to the market. So we firmly believe there is a strong case for structured products on blockchain and in the form of native security token. And we have seen, quite decent interest from our clients on that front. And going through those transactions, increasing the complexity of each of these transactions at each step is for us the best way to build this infrastructure, making sure we address real client need, making sure we work along with regulators and central banks. We have partnered notably with Banque de France to also participate into their official CBDC experiment program to learn together and to build the infrastructure together, make sure we understand each other. We select the appropriate operating model. We build based on the appropriate technology. And we deliver transactions, which again are completely pari passu with traditional financial transactions, onboarding also into that journey law firms. Because there are also an important stakeholder into this journey who are themselves advising their client on the level of maturity of regulation into that field and giving, at the end of the day, appropriate comfort to legal department, compliance officer, risk managers within our own institution, Société Générale, and then among other financial institutions with whom we are working and delivering this technology to the market.
Hey, Janet, are you doing this on, let's say, public blockchains or on private blockchains?
Mm-hmm. We at Société Générale Forge we have a very strong preference for public blockchain. It's already a few years. We are firm believers that a real transformation in the financial industry could only come together with public blockchain technology. That's where we will see new business models really emerging. There are some merits to work on private blockchains, but the real transformation, in our view, of the industry won't come there. Having a network which is shared, a ledger which is shared on a worldwide basis with strong interoperability features is obviously much more interesting than having something which is run among a close group of financial institutions, for instance. No, that's probably not the easiest way to go, that's for sure. You mentioned secondary market liquidity and transaction in your previous question as well. It's sure that there are some challenges associated to that. It's true that under this public blockchain infrastructure, you do not necessarily involve a CSD, a central depository, into your operation. It's not requested by law in some jurisdictions, but disintermediation, simplification, massive simplification of the financial infrastructure will also come, at this price.
Yeah, so I think in the first episode in the first part of this episode, we had a decentralized finance founder speak to one of my co-hosts. So you've seen, and I work for a DeFi protocol as well, and now DeFi has grown from last year, say early in the year, the total value was around 1 billion in DeFi. Now it's grown to 120 plus billion. in Ethereum itself, and 20 billion in one protocol. So in the team I work with, work for, and I mean, are you guys looking into the DeFi space at all? And how do you see this? I mean, there is whole other permissionless innovation, and by permissionless innovation, I mean innovation by developers everywhere in the world that's happening. What's for you on DeFi and sort of the innovation we are seeing in cryptocurrencies and more stable coins?
Yes, sure. So, even if we are working in an established financial institution, Société Générale, which is more than 150 years old, we are quite ambitious and willing to test very innovative and disruptive features in that field. And again, we are firm believer that blockchain technology will bring this level of disruption and enhance quality of service to clients. So just as we issued financial instrument in the format of native security token, embedding within the security token many of the feature of traditional financial instruments to seek for, automation of a lot of things, starting with corporate event. We do also believe that there are some merits in exploring a DeFi solution. On our end, where we see the most immediate and promising use cases for DeFi solution in financial market stays in the secondary market and repo part of the trades, automating and looking for enhanced financing solutions using DeFi is to us very promising, and we started to work on that on these solutions to offer some solution to clients.
That sounds incredible. And I recently, we earlier had Claire, the Chief Digital Officer at SocGen, earlier on Chief Innovation Officer at SocGen on our podcast, and we talked about central bank digital currency. So I heard, we've heard that you guys are doing some really interesting work with the European Central Bank. To the extent you can share what you're doing and what your point of view on central bank digital currencies is and the role blockchain will play, that'd be incredibly helpful.
Yes, sure. It's a very important topic, and I think people have to realize that CBDC are on the agenda of central banks and will arrive sooner than people may anticipate, and that obviously it will have a major impact on the way financial market do operate and payment infrastructures do operate. So obviously there are, many things I can't really share, but what could be disclosed, the ECB and notably the national central banks, which are part of the Euro group, running the Euro system, have engaged already a few years ago and more into programs to experiment, test, and learn what a digital form of currency could bring in terms of efficiency, improved security, improved transparency to financial markets. And on our end, we have strong collaborations with 3 central banks across the globe, most notably Banque de France here in France, where we were selected in May last year to be part of their official CBDC experiment program. As part of this program, we just issued in partnership with the European Investment Bank a non-secured bond, a 100 million unsecured bond, which has been placed by a syndicate of 3 banks, Goldman Sachs, Banco Santander, and Société Générale, to investors. And this issuance being settled through CBDC that has been issued by Banque de France also to test and to gain some market knowledge on what such a wholesale CBDC could bring to those operations. And I can tell you that the work is well advanced and results were promising, but the program is continuing now and will deliver other results.
Yeah, Jean-Marc. So as I think we have a couple more minutes left. As bankers, serious people. So I'll ask you a not very serious question. What are your views on Elon Musk's Mars currency? and and Dogecoin. Is Dogecoin the right currency for Mars? And and if you were to design let's say you didn't work for a bank, I mean, don't get me wrong, and there was no regulators, no central bank, none of that, and you had to start the financial
no recording,
and you had to start a financial system from the beginning, and you designed a digital currency for payments. Would it look like Dogecoin, or would it look somewhat different? Would it look like Ethereum, or how would you build it?
Well, to be honest, I haven't looked such in detail into this proposal. I guess it's interesting. Like many, I think we are still in a period of time where people have to test and learn. I mean, all proposals are interesting. We run our own, let's say, analysis to select the public blockchains on which we issue the security. And maybe what I can answer is that we look at different factors, and anyone should probably have the same reading of a blockchain, not just focusing on price or any particular feature. I think governance, resilience, and performances, such as speed and scalability of the network, is key. But we should approach that in a dynamic way, looking into the future and not only at static characteristics of such protocol.
Okay, so you agree with Elon Musk on the block size and the block speed. I'm just joking here, but you don't necessarily agree on the governance. Okay, so I mean, we'll pass that message on to Mr. Musk, and so thank you for contributing to for all the exceptional work you and the team have been doing in enterprise. It's I can assure you, I've been on the other side. I think all of the Breaking Banks hosts have been on the other side, and we know how much work it is to some of the challenges of innovating inside a financial institution. But I think you and the team over at SocGen have done a tremendous job.
Thank you.
Hear from you again in the future. Thank you so much for being our guest today.
Thank you for inviting me. Have a good day.
My pleasure. Thank you so much, Armin.
Bye-bye.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.